Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. Just a quick emergency video just to make head or tail out of exactly what's happened over the last 24 hours or so. So in today's video, I'm just going to have a look at exactly what's happened to the Bitcoin price, a little bit about the 60-day cycles that we've been talking about over the last few videos, and why this move could possibly turn out to be extremely bullish. So if that sounds interesting, then without further ado, grab yourself a cup of tea, sit yourself down and eyes on the screen, and let's load up the Bitcoin vault. Okay, so I'm just going to start on the daily chart of FTT. This is the token of the FTX exchange. I don't use that exchange, but if I was using that exchange, I'd get my money out of there ASAP. Obviously, a lot of things are going on and we don't really know what the truth is behind the matter. All we know is that FTX has been using clients' money to fund the operation. So there's obviously some sort of a liquidity issue going on there. And together with Binance, who I think withdrew quite a lot of their FTT tokens, they're now looking to buy FTX, the exchange, once they've done their due diligence. And obviously they're going to be looking to buy FTX at a very cheap price. What I want to look at is the repercussions on the Bitcoin price. So this is what happened when the news broke out yesterday. The price went south all the way down from $22 down to around about $2.51. I'm not sure that's the end of it. This could just be a dead cat bounce before it goes much further down. But unfortunately, it really spooked the markets, and Bitcoin from yesterday went down from around about 20,700 all the way down, breaking the previous low in this bear market of 17,500. So our ratio of a 75% to 25% means now that the 25% seems to be playing out here. And it really needed this kind of an event to actually do that. Without this event, I think we were going much further to the upside. But we have to deal with the price as we find it. So what we need to look at is what happens next for Bitcoin. In the last few videos, I've been explaining the Bitcoin cycle, the 60-day cycle, which started over here, which topped out within 6 days, which we would have expected to have topped out around about 30 days around here. However, this led to this fall, but this consolidation was giving us the sign that the 60-day cycle low, which we would have expected, and I mentioned this in the last few videos, this is what I was expecting as part of this 60-day cycle that started over here. And the 60-day cycle from this point would have taken us to about the 6th of November, which is about here. And at that point, we were actually flying in the sky over here. But with these cycles, as I've said many times, that they're never exactly 60 days. You can always have a flexibility of around about 5, 6, 7 days either way. So the question is, yesterday was the 8th of November, so that's 62 days, and we've come down to this level here now. And this event that we've just had could well spread over the next few days. So we really need to have a look at how far this event is going to take the price of Bitcoin to mark the end of this 60-day cycle from there. Now, there's a little matter of the CPI data coming out tomorrow morning, which I'm sure will have a big say in what happens to the price in the next few days. The reason why I've got the volume on here is because I'm trying to make head or tail in terms of whether we've really exhausted all the sellers in the market. So if we have a quick look at the volume in this bear market, since we topped out at 69,000 here, we've really had 3 major capitulation events, there, and just now here. And this one is just slightly bigger than this event and this event here. Now, what's of interest is that when we had this first major fall over here, the market fell around about 36-37% in this capitulation over here. The second capitulation event on the 13th of June brought the market down from these levels here down to the 17.5, and that's around about the 44% fall. But this one here, with a much greater volume than both of those two, brought the market down from around about the 21,400 to our 17.5, 17.2. So that's about a 20% fall. So while the capitulation event is bigger, the actual falls are much less. And that would explain that as we've been making our way down in this dominant downtrend, the number of sellers in the market has been exhausting And this may well be the final exhaustion of that, manifesting in a much smaller percentage fall over here than the other two capitulation events over here and over here. And if we have a look at the last bear market, how that panned out. When the market turned at the $20,000 mark, we really had another 3 capitulation events. One over here right at the beginning with a big fall down here. Then the second one over here when we had this big fall. And then the third one was our final capitulation event over here. So once again, we had 3 major events, and these were quite similar falls to each other. So these events don't really come very often, but in every bear market there seem to be around about a few of them. And maybe this is a sign now that we are at the final end of the bear market. And the reason why I said earlier on that this could well turn out to be extremely bullish is that, as I've said many times before, whenever we break a support level like this, the market tends to have a fade below the support level. And if we can then recapture that, that turns out to be an incredibly good point to buy. And obviously, similarly true for a resistant point, where the market has a resistant point and it just fades above it, and then that turns out to be an extremely bearish market trend. So what I am looking for really is a daily close on a few days here above the 17.5 mark. We've obviously faded below the 17.5 over here, having broken the previous low of the 17.5. The lowest we've been to on this exchange on the trading view is 17,250. So that's about $250 below. And that's quite bullish as long as we can hold several daily closes above the 17,500 level. And then we should be good to go to the upside again. This is where everybody's panicking and maybe wanting to sell out. But this is probably the worst point to sell and probably a very good point to buy. So the question really is that if we do break this 17.5 with a daily close below the 17.5 from over here, then the chances and the probabilities are that we are going to start making a way down towards the $12,000, $13,000 mark. And the reason why there would probably be a free fall towards that $12,000 mark here is because, as you can see, there's hardly any resistance points here, so there aren't any levels to basically protect it until you get to this level here, which is 12,000. So only time will tell. I just wanted to share my thoughts on exactly what's happening and just my insight into it. And if you found value in the video, then please do remember to like and subscribe and to turn on the notification bell. And if you have any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.